What is up, everybody? Logan coming at you guys with another video. I was going to go over in this video how I have about 70 trading wins in a row, trading credit spreads, both put side and call side credit spreads. And a couple things I want to go over in this video and how my win rate's been so high. And overall, I would say over the past like 2 to 3 to 4 months has been the best run I've ever had trading. And overall, like throughout my life and in history for me. And I think what's really cool about this too is we've seen the volatility index completely shift throughout this entire time. So being more mindful on like when it's time to shift away from the 0 DTEs and shift more into like 1 to 2 to 3 to 4 DTEs. But this is for, trading on the S&P 500 only. I don't trade anything else at the moment. It is literally just anything that's SPX, SPY, or XSP. No sort of individual stock or anything else like that. Nothing other than credit spreads and maybe a couple butterflies along the way. A couple of things I've done differently since then. And if you guys come over here, you can see under the Logan's callouts tab, as we get this to load, that these are all of the trades that I've taken. And I do have a spreadsheet actually as well. That Vance and I have to finish continuing to update, and then we'll have a video going over every single trade here shortly as well. But all of these did end up pretty much working out, and we even had one where we had opened a trade for 45 cents, closed it at 35. So we had a couple really close to break even trades throughout this whole process as well. But a couple people sharing their story and group gains. If you guys would like to come trade with us, the Discord is down below. This is Rycor's growth relative to the S&P over the last 3 months for him, just trading in the Discord. So it's been really phenomenal. And this is just with smaller sizing too. Like I said, a lot of people can do really well if you size really properly. And I think that's one big deal with trading is when you win so many times in a row, like how nice would it have been if I put my full portfolio in every time, right? Or half or whatever, but that's very irresponsible at the end of the day. So to kind of approach trading from this, take on low risk, like your whole goal always should be reducing your risk because that's going to always be the best long-term option for you. So you can continue to trade for, years to come. And it's not something you do for 2 years and then give up. So pretty cool. Just really proud of the members too. If you guys would like to come trade with us, the link is down below. But let's hop into this checklist, which starts out with, I do have some of the ES supports. We'll go into that under number 5. The expected move math. Now, I've kind of switched this up a little bit from anybody who's watched previous videos of mine. If we go to the expected move chart, but if we take a look, I used to day trade off of this information on the next following trading day, right? So the expected move at close is 24, so it's very low. But I thought about it recently and it was like, what if I could get that volatility decay overnight? And if I'm able to get the direction right, there's going to be so much volatility burn off these contracts to where something that's 90% out of the money, you could wake up and you're, 99% chance out of the money just from the market not moving. And with the VIX this low, very rarely do we gap up or down overnight. But as long as you stay away from the iron condors, because my whole thesis has been being on the right side of the trade for these last couple of months. And I've traded like 2 iron condors this whole time because I think iron condors really aren't a great strategy. I really think you have a high chance of getting tested on either side. And I really think iron condors are just for simply greedy people, unless you have a strict strategy around that. And I'm not saying like you need to, I don't want to say iron condors are bad because they're not bad. But at the end of the day, you have to understand that this market doesn't just move sideways. It does have a lot of flat days with the volatility this low. But if the market moves down 60 points, no matter what, like even if you aren't in the money, yeah, the one side's worthless, but the other side holds all that value that you basically lost on the other side. So you didn't make any money at all. You're flat. Right. So that's another thing why like I haven't been trading the condors is the only real way for me to make money on them. And for anybody I think who's watching this is to actually leg into them and change the expiration date on a lot of them. But if you're doing 0 DT condors, you're either going to be sweating all day watching the trade or you're going to end up losing. Right. And that's just how it goes. But I think, and that's just from a standpoint of like what you should expect, right? Setting your expectations for, wow, maybe I shouldn't put a condor on today and expect the market to only move sideways, because this thing definitely gets moving, right? And if we go over to SPX stock, but it's pretty much ever since March, right when the bank started to fail, I started selling put credit spreads for the majority of this time. And then I switched to call credit spreads in later May when 4,200 was the big level. When 4,200 got broken, I took on longer expiration, like call credit spreads. And then on this like little run up here, we were on the put side for a couple of these days. And then on some of them, we were on the call side, had almost got tested. And then this whole week we've been pushing back down and have been staying on the call side. So just had a really good read on the market and where our major levels are, because this 4,200 to 4,400 to 4,000 zone is one of the bigger zones and one of the bigger known areas for the entire, bear into bull market, because we have done that pivotal switch where we have recovered over 20% off the lows, which technically takes us out of that bear market. So even if you look back at the 5 years, right, where we are now, it's almost like this whole bear market didn't even happen. At least that's how it feels, right? For a lot of people, including me as well, where you just see this and you go, okay, look at how much everything's bounced back. You almost forget that we were at 3,600. And last summer at this time, literally we were at 3,700, just because it's recovered so much. And this year has been bullish, right? From the start of January at 3,800 all the way to where we are now, when we were knocking on the door of 4,400. So if we hop over to the whiteboard, we have our little buddy here, and our little buddy is going to trade every day off what the expected move is at around 2:30 p.m. Eastern time. And it lines up pretty well. And the reason I don't like to go to try to get fills after 3 o'clock is the market's so volatile, right at close. If we go to the 1 day today, for example, if you're like, I'm going to put my call credit spread on at 345, and then the market drops like this on you and you never get your right fill, there's 15 points that got ripped out in the last 15 minutes of the day. So that's why I like this like 2:30 time right around here. And we slapped some call credits on today. The market did move down, and hopefully we can take them off right when we wake up in the morning and add to our win streak. But overall, right, the market's moving pretty far down. We do have a couple major support levels, but one thing, if we go back over to, we were talking about that expected move math, you get the expected move off the options chain on any platform that trades like real stocks. You're not going to get it on Robinhood. That's one of the worst platforms. So if we take a look down, did we have a gap up or a gap down, right? I always check that on my list. Where's the VIX, right? We have that volatility index, so VIX stock. The VIX actually went up quite a bit today too, which is a really good sign for anybody who might be bearish on the market or had bought puts or got rid of your calls last week. The VIX likes to move in like these pretty solid 5-point increments, right? 20, 25, 30, 35, and 40. We actually got down to 15, got down to 13, and it looks like we're heading back to 15 here. So we'll see if 15 acts as some sort of resistance point for volatility, which you don't want to get like too attached to the volatility levels, because these move all over, and doing a lot of technical analysis on the VIX is pretty useless. But when it drops 20% in a month, you should expect it to hop back up at some point for some short amount of time. So hopefully you can take advantage of it. So if we hop back over to the 0 DT checklist, then you can, I really don't even look to see if we exceed the expected move from the day before. I kind of keep my eye on it, but anytime we do exceed the expected move, there's generally some sort of reason for that. And whether that is, something to do with politics or the economic situation, right? If we're looking at non-farm payrolls coming out, that was a lot of the move we had. The debt ceiling talks, right, was a lot of that early June move that we saw. So I think that's another thing to be a little bit more mindful about is, where are we on the charts, and where should we expect to go from here is another really big takeaway with how I've been trading lately. So a lot of it's very contrarian. I like, if we see a big green day, I like to take my call credits. And if we have a red day, that's when I look for the put credits. But also we have these major ES supports, 4290s. If we get a big test down, right, that we'd have to fall quite a bit further from here. So I keep track of these levels and I just see how the price reacts to them. You should expect to test support when the market is overall bearish at this moment throughout this last week, basically since last Tuesday when the market reopened. And, taking a look at these levels and how the price reacts there, because I think so many people think, okay, if it gets to our support zone or a support level, I need to take the trade immediately because we're there. When I tell people, no, you want to wait and see, and you can even use a full trading day to see how the price reacts at these levels, to see if it's worth shorting, to continue to be on the short side, or if it's time for you to take a long position again. So that's one thing that I like to do is like, how strong are the bounces off of these levels, right? Where am I looking at placing the trade if we get down to these levels? And where can I also take more trades? More maybe put credit spreads if we continue to fall. And then I also do track the weekly expected move as well. So like, for example, this week's is 54, Rycor mentioned, right, today, 54. So if we were to fall 54 points, like within the next 2 days, I'll add a put credit spread that puts me like 2 or 3 times outside of what was expected earlier this week, and maybe expiring Friday, right? That would be my trade situation from there. So those are our levels. And then, like I said, sizing is anywhere from like 6 to 8% of my account at this time. With the VIX this low, I don't like to get trapped in anything, or I try to just continue to size small, because even sizing down and using not very much of your portfolio, the wins stack up over time, right? Like 70 wins in a row, let's say you're getting 8% return on your collateral. I mean, you're really doing well. And if you're risking like 6% of your account, and for math purposes, we can say you get a 10% return on your 6% risk, right? That's a 0.6% growth on the account. You do that 4 times in a week, you're up 2.4% on the account. And that's like 8 to 10% a month, right? So that's where trade timing comes in as well. I've been liking taking trades. I said at 2:30 p.m. with these 1 to, I haven't been doing as many 0 DTEs, but these 1 to 3 days as of lately, because they've just made the most sense to me personally with how the market does move. And once you get 3 to 5 green days in a row or 3 to 5 red days in a row, you should expect it to chop or flip the other way. So that's when you're able to flip to the other side and take some other trades. I try to choose my strikes either above or below a psychological number. Like, for example, if we're trading at 42.80 and it's the end of the day, I'll try to go up to like 43.25, something big and psychological, to where it's like we'd have to break through 4,300. We'd have to 2x the expected move overall. Our risk management, it comes down to rolling. I would have gotten stopped out 12 or 13 times during this last 70 wins in a row run that I'm on. But no, I decided to roll contracts, and I try to roll them before they get in the money. But since you're risking such a low amount of your account, if they do get in the money and you have to pay a debit to roll, you're able to hedge by getting put credit contracts on the other side, going a couple of days further out. And then setting expectations, I think, is like the biggest. If we take a look at some of my more recent trades, if we scroll up to, I don't know, over here, the 22nd over here, 42.45, 42.55 for 55 cents, right? Look at this. We're 1.75 the EX, or sorry, 1.7 times the EM for this trade as well into tomorrow. And we'd have to get to 4,200 and 42.20 for that trade to get tested. And I think that day, we let that, yeah, right here, this trade should be good to expire, 44 wins in a row or something wild at that time. And that was over a month ago. And we've just been putting a lot of trades on since. So I think, oh yeah, my shark fishing trip, that was a good time. Caught some sharks. So fun. It was ridiculous. But yeah, that's one thing that, with our trades, if I can get at least 4.5 to 5% at least, some of them I'll get 8%, 9% on, and risk 6% of the portfolio, these wins will add up and you're just able to outperform the S&P, right? I think that's one thing people don't think is possible, but I've been doing it for years now. I've been doing it with the group, and I just think it's, something that's really important is to set your expectations. Or if you try to outperform the S&P in one day, good luck. But if you take the right setups over time with the right expectancy and the right risk, right, and just be patient, wait for the trades to come to you. Overall, like, if you're going to take a trade, know exactly why you're getting in and when you're getting out. If you are to use stop losses, but I found that rolling has been the best way. I've been rolling for years, and you're really able to hedge if the market gets out of control against you, which is also why I don't always have trades on. I think that's something else that people should kind of take into consideration when trading too, is like, you don't always have to have them on. But this guy here, this is me. No, I don't know who that is, but he waits till 2:30 every day to take these trades. And overall, like, you can get that 5 to 6%, try to get 2 times outside the expected move, and just try to focus on the right side of the trade, right? Type it out or write it out. The right side of the trade. So the right side, not the light side, not the dark side, the right side, which is so important because you should just do some sort of research on where your levels are, how you're reacting to them. I have a very great intuitive feel on the markets as well, which I think is very helpful. But you overall, like, if you're at a massive resistance level, right, probably shouldn't be going long there. You should probably be looking at being on the short side. Days with a lot of chop, right? And that's why I like to roll, because even if the market does push against you a little bit, you aren't immediately getting stopped out for a 3x tight loss and then watching it shoot away in the other direction. So yeah, I just wanted to say that really quickly. I hope this kind of helps you guys gauge where my mindset is. If you've watched a lot of the other videos where you've taken these trades, I think that's something that's really important too, is knowing what we've been doing and know what you guys are doing if you're taking your own trades, and like document them, why you're getting in, why you're getting out, having a nice little trade journal to go through. But that's going to be everything for me. I do appreciate all the support as always, and it would mean a lot if you guys did leave a like, comment, or subscribed here. That's going to be everything for me, and I will see you guys in the next video.